I want us to at least get a little bit ahead so we're not crunched for time on Friday. Because Friday's going to be a shorter day because it's Friday and we have pep rally. Hopefully you can hear it. But what we have is this sheet right here. We have this sheet right here, which we're going to go back and review who is helped and hurt by inflation. So, I want us to think just who benefits, who hurts. Let me see if this pen writes. Okay, so I'm going to put benefit. And I'm going to pin that out.
Use that purple one. That purple's good.
That purple one's good. Benefits, who's hurt. So, I know who's hurt by it is creditors, savers, senior citizens, and people who live on fixed incomes. I can't even, fixed incomes, right? So creditors, because they're paid back money that is worth less than what they originally let out. Savers, do they make enough off their savings? You know, because the rate of interest is like 1%. Senior citizens, they don't have like, unless they're like millionaires, they don't have that extra money to take for inflation. And people who live on fixed incomes, which are y'all, right? Y'all lived on pretty fixed incomes. So when inflation occurs, does that pinch your pocketbook? Okay, so the people who benefit from inflation, these are people who have COLAs. Do y'all remember what a COLA is? A cost of living adjustment. Does your boss right now give you a cost of living adjustment? No. I'm sorry, but in the future, I hope you'll be able to negotiate that into your pay. We also see people who are borrowers benefit because they will pay back less. And then the people who can anticipate inflation and people who get a fixed rate loan. Sorry, the island was kind of crooked. And so on the test, you'll see that there'll be some multiple choice questions that are like, you know, they'll give you a scenario and you have to figure out, does this benefit them or does this not? So let's read through some of these things and we'll determine if this person benefits or is hurt. And we just read the scenario, determine if the individual is helped or hurt by inflation. We have to explain the answer. So Jack retired 5 years ago and he now lives on a fixed income annuity and a small savings account that pays him 1% interest on the balance. The current rate of inflation is 1.7. So is he helped or is he hurt? He's hurt. Why is he hurt?
Because he's losing my power.
He doesn't have the purchasing power, right? Inflation actually makes his money worth what? Less. Okay, if we reason through it, we'll be fine. So let's look at Jill. Jill has worked at her current position without a raise for 4 years. Poor Jill. But because of inflation has risen 5% over the course of the 5 years, she has struggled to pay her day-to-day living expenses at her house and her house payment. She has asked her employer for a raise and he gave her a 6% raise because she's such a good worker. Helped or hurt? She's helped. Why do y'all say she's helped? It's above the rate of inflation, which the rate of inflation was 5, right? So what's true? Did she really get a 6% pay increase? She only got what? 1%. Okay, so Peter has been saving his money to buy his girlfriend an engagement ring. Aww. He decided to give that money to his mother to hold for him so she wouldn't spend it rather than putting it in a savings account in the bank. During this time he was saving, the price of the ring increased by 10%. Helped or hurt? Hurt. Why was he hurt? Did this savings make any money? His mom holding it, that means that money, let's say it was $100, now it's actually worth 90, right? in the future when y'all are millionaires or whatever, that you put it in something that you're gonna get more than the rate of inflation. Let's look at 4. When he manages a bank in a local area, the previous manager had made several fixed rate loans to customers at a low interest rate to bring in new depositors. The inflation is now rising at 3% a year. Help to hurt? Hurt, because is he gonna get paid back the same amount? No. Luke works for a building contractor and a member of the local iron workers union. The contractor is currently building 5 skyscrapers in the Chicago area. His union just negotiated a 5-year contract that includes a small annual raise and a cost of living adjustment. Helped or hurt? Why do y'all say helped? They have a COLA. A lot of labor unions often get COLAs. Alright? Let's look at 6. Leah just read the national debt owed by the federal government is at an all-time high. So the government owes money. Not the government. They owe money, but inflation's going, right? So does the government pay back the same amount that it was loaned?
No.
No, it's what? Helped. So like this government right now, under the Trump and Biden administration, have they borrowed money? Yes, but is inflation occurring? So when they pay back that money, are they gonna pay back the original value worth? Yes.
There's like a really cool bug at the top of your window,
It's okay.
and he's just saying hi. I think it's cool.
I didn't even notice him. I don't wanna scare him. What kind of bug is that? I don't know if he was dead, he would. I gotta show the people on the camera now, cause I don't often get bugs. Oh, I have bugs in my room, but now this is just further proof that there is a bug. We'll know if they watch the video. Look at the bug. If you can identify it on there, I'll give you like 5 bonus points, online people, cause that means you've watched it. Say hi. I don't know what kind of bug is that. Well, if it was like a locust, it would be making noise and we would have heard it.
I think it might be like a grasshopper.
A giant grasshopper?
I don't think
We
we get those in the field all the time.
Maybe he's tuning into economics because he wants to find out about his interest rates. No hopes. Okay. Han works at, let me go back to this one. So the government will borrow from the Fed. And so when they borrow from the Fed, eventually when they pay them back, what has happened to inflation? It's gone up. So the government is a borrower. Do borrowers benefit when inflation occurs? Yes, and that's why they're helped, because eventually when the government pays that back, they're not paying as much as originally was there. Han, he works at the local tax agency. The county commissioner just voted to sell license tags at the same rate for the next 5 years. What's gonna happen over the next 5 years?
Inflation.
Inflation, and if they're selling it for the same price, are they helped or hurt? They're hurt. Because $5 today isn't the same as $5 tomorrow. So what do they need to do with their prices a year from now? Raise it, and then from 2 years from now, they need to raise it. And so I was just doing this with my husband. We lost his stinking birth certificate. And his mom had ordered him one in the 90s, and it was like $2 from Chicago. And it was $2 for shipping. Yesterday we tried to get it because he had to renew his license. It was $70. It was $15 just for the thing. And then to get it certified was another $25. And then to get it shipped was $20. And she only paid like $10 back then. Has there been inflation? Yes, and so now when y'all go get your driver license, I think they charge you like $25, right? It used to be like $15 before. And so does the government raise the prices of things to be able to compensate for inflation? Yes. Hey, Lando, it says Lando, right? Signs a 4-year fixed rate lease for a condo he's gonna live in while he attends college. He's helped. Why is he helped? It's fixed, so in 4 years, will that price of that condo have gone up? Yes. How do y'all feel about helped and hurt? What we're gonna look at is the book still there. And we're gonna start this note set that you got for us to talk about inflation. It looks like this. We should have done it with the book, but I just know that when I ask you to do anything with numbers and I haven't explained it, it doesn't go well. So I just sucked it up and just realized that we'll do homework that is math-based. So inflation. What inflation is just the occurrence, or it occurs when the economy's overall price level is rising. So many people, like in my 6th, 7th period, they're like, oh my gosh, gas price is rising. When I compare it to last year, we have inflation. And I'm like, no, that's just one item. I have to look at the general increase in all items. Today, can we say that there's been a general increase in the price of inflation, in the price of items? So that leads to inflation. But we know that that inflation has been caused by what event? COVID. COVID caused what we're looking at as inflation, because several of y'all are realizing that there's scarcity, right? Nicole brought up at the beginning of the year that at the the fireworks stand, they didn't have as much, and so prices for fireworks were actually higher than usual. Have y'all seen in years before that you go to the fire stand and they have like 50% off, right? They weren't running those specials because they had scarcity. And also that caused a general increase in the price level because those places were closed. And what we're gonna calculate today, yes,
Do you have another copy of that?
I do. We pass that back.
Thank you.
And what we're gonna be calculating, just like we did with GDP, is the rate of that inflation. And so the rate, the definition of the inflation rate is the percent change in the price level from one year to the next. Didn't we see this when I did GDP? That we had to get everything in a market basket, we had to total that basket, then we had to get it into a number, right? And then that number, we then took it and got into a percentage. We're using the exact same math. So, what we will see is that our government has a Bureau of Statistics. And this Bureau of Statistics, they basically are dividing up America. And they divide it into different sections. Because, like, do you think the cost of living is a lot more expensive in New York? So what would happen to the price of their market basket? It's really high. So what they start to do is they start to group places of America into little regions. So there's the Northeast. The Northeast probably shares a lot of commonalities of how high prices are, right? We're in the Southwest, and what they do is they actually have statisticians, if you're like into this math, that go out every single month and they basically buy goods. They buy bread, they buy milk, and then they say, this is how much it cost. And they average out the cost to get a mean. And they're like, okay, in this area of America, milk is cheaper. And that gives us a market basket of how it is to live in that area. Do you think the cost of living is a lot less in Texas compared to the Northeast? And we get that information from the Consumer Price Index. The Consumer Price Index is a measure of the overall cost of goods and services bought by a typical consumer. cares about this, but this is something that they often, this stuff affects your jobs. Because when this market basket goes up, does that put pressure on your bosses to increase your wages? Yes. It also puts pressure on the government that they need to increase wages. And so, let me just show you a typical market basket. I have a PowerPoint. I've stole this from my friend, Mr. Mayor. That it's not that. It has basically what our book has, but it's just really boring. I'm trying to find a market basket. Here's our market basket. Okay, this is the typical market basket that the Bureau of Statistics does. And so one of the things is that this is gonna affect you later in your life when you try to buy a house, when you try to buy a car. Because what they're gonna look at is they're gonna look at what is your gross take-home pay. And let's just say it's $100,000. Well, they're gonna say only of that $100,000 would 41% of that should go to housing. So this would limit the amount of house you could buy. Because those lenders will not let you go above 40% of your pay. When you get out a credit card, I don't know how many of y'all want that in the near future, but they'll look at your pay and they're like, oh my gosh, she doesn't have that much. We're only gonna give her a $100 limit. Because what they look at is they look at what this market basket is and they determine how much you should be able to be lent. And so for y'all, do y'all think your market basket looks like this? No, because y'all don't have to calculate for what? Housing, because you're getting bankrolled by your parents, right? What is the biggest thing of y'all's market basket here? Transportation. And it's not even the car sometimes. It's the gas, right? Huh?
I said food.
Food, okay, that's another one. It was actually a lot bigger for most. And so the Bureau of Statistics has actually, this is a typical one for a family that has a house. And they realize that a market basket for a family that is actually renting is gonna be a lot higher. Because rent is a lot higher than buying a house. And so a lot of this will affect y'all, and there's different things, and they're constantly updating this. This is one from the 90s. What do you think they eventually had to put into this after the 90s? What little category did they have to put in? What in technology though? Phone bill. They had to put internet bill. And so what happened to that? Do we even have technology here? No, they put technology. And what do you think happened to that percentage? It increased, but what do you think they had to, this is only 100%, did they have to take away from else? Where do you think they took away from? Recreation, transportation, and housing. So when you ever go to get in your near future, it's probably not even a glimmer in your mind right now about owning a house. Hey, no. Maybe you've like thought of your house. But this is what they're gonna look at, and they're gonna look at your income, and they're only gonna lend you 40%. So I had a friend who was actually, he was single, he had a girlfriend, and he realized that he could only get a house that was worth $150,000 because his income was a lot less, right? But when him and his girlfriend got married, what happened to their income? It doubled. Dual income, no kids. Could he afford a better house? Because this percentage became bigger because they were combining their incomes. So do y'all get what the CPI looks at? You're like, no, I don't care. I just know inflation hurts me. Okay. So why is CPI used? It's used to monitor changes in the cost of living. And over COVID, I know I keep on referring to this, but this is like a huge thing that has shattered the economy. When they were looking at CPI, was there massive changes in our cost of living? Yeah, because when we started looking at people staying home, what happened to their food bill? It went up. What happened to transportation then? It went down. Okay, housing. Did people start getting tired of living in apartments and they're like, maybe I should get a house if I'm gonna be stuck in here? And so our CPI market basket has changed because of COVID. And so what issue do families face when CPI rises, when inflation rises? What issues do you think your family faces? Prices go up. Is there just a magical tree in the back that your parents pull money from? So what happens? Your quality of life decreases, right? Because can they buy everything they were once buying? And so what will happen, what families face, is that they have to spend more money to maintain their standard of living. Or what happens to their standard of living? It declines. And this is why it's really important for y'all just to be in the future, because I don't know, in the glimmer of your eyes, if you have a house, 2 kids, or it's a house with like 7 dogs and a million cats, whatever it is, you're gonna wanna provide a good standard of living to the cats, the dogs, the fish, the animals you take in. And you have to be very cognizant of this, because if you know inflation is going up, can you ask your boss to be like, hey, I need a pay increase? And what we often find is when those bosses say no, do people look for other jobs? Because when they hire for that new job, what has happened to that pay? It's gone up. Because has that pay been affected by inflation? And this is why people move jobs, because they're often not given that extra money. I had a kid several years ago, he worked at Office Depot. He was getting paid $7.25. In over 2 years, inflation occurred, and when they hired new employees, they were paying them $8.50. They refused to give him that $8.50. They said, you get quarter increases for your merit. He quit there and went to Target, and he was getting paid $10. Do you understand why he left? Was it hard for him to get that increase? And there was a reason. Could they just replace him with someone else? But a lot of you are going to be going into specialized degrees, right? Do you have a knowledge that cannot be replaced by someone else as quickly? Retrain. And so when y'all get into those fields, not like education like I am, in education everybody gets paid the same in socialism. But whenever you get, most of y'all are like wanting to do other things, right? And you're going to be able to negotiate your pay, and that's when you look at what's going on in this price index, you'll look on what's going on in inflation, and you'll step up to the table and be like, no, this is what's going on. I'm being paid less. Y'all need to increase it. I'm valuable to your firm, right? So let's just be on life lessons with Ms. Radine. Let's now calculate this. For us to calculate CPI, we have to create a market basket. And so here's my little fictitious world. Just like we did with GDP, we're going to multiply across. So for hot dogs in my fictitious world, what's the total? 4 for hamburgers. And my market basket this year is 8. Doesn't this look exactly like GDP? So now let's go to year 2002, before y'all were born. What's my total for hot dogs? What's my total for hamburgers? So what's my market basket? Now let's go to 2003. What's my total for hot dogs? What's my total for hamburgers? What's my total for that market basket? Does it look like there's been inflation? Yes. And so I want to get us an index that will tell me what is going on with inflation, because eventually I'm going to divide this to get my rate. And for us to get my price index, I have to take the year over the base times 100. So let's just do 2001. I take the year, which is what? 2001, 8. Over 8. What does that give me? 1 times 100, that gives me what? One of the things I will always tell you, your base year will always be 100. Because you're dividing that number times the base. Yes, you're like, y'all are mathematicians, I know. Okay, so let's look at the next one. 14 divided by 8 times 100, and I don't have my phone because it's over there. I don't know if I have it.
I got it.
You have it?
Yeah.
Okay.
112.
So 14 divided by 8,
1.75
5 times, oh wait, 100, that gives me 175. Okay, so now let's do the last one. 20 over 8 times 100. Gives me this. So now I'm gonna find the percent change, which we just did that when we were doing GDP. If we were to do it for the first year, we'd realize what was going on, we would always get 0, right? So here, I take the new year minus the old year over the old year times 100. It looks exactly like GDP, right? So let's look for 2002. What's my number? I take from here, 175 minus what? Over times. Okay, this is a lot going on. So 175 minus 100,
Is that a 6 or a 0?
6. Gives me 75 over 100. You're already like that's 3/4, Miss Verdine. 75%. That's 100. That gives me 75% inflation. Okay, for the next one, you go to the previous year. So if I'm doing for 2003, what's my first number? 250. What's my year before number? 175 over 175 times 100. See how this goes. .8%. Do you think AP would ever ask you something like this? No, but this one, was it easy to see, like 3/4, and then you're like, oh, 3/4 is 75%? The math will be doable. I actually took this from one of the old AP tests. Okay, so let's look at the back side. Here I screwed up. Do y'all see? Oh no, oh no, there it is. I missed a 0 there. Y'all see that? So here they've actually given us the market basket. They've given us the total. So there's no math to do like we did with the hot dogs and hamburgers. So now I just want to get the rate. And to get the rate, I take the new year minus the old year over the whole year times 100. So for 2015, it would automatically be what? 0, because when I'm putting this 1,000 over 1,000 over 1,000 times 100 gives me 0. Okay, so now let's look at the next one. Huh? I could eliminate all the zeros and just do 1, right? If I wanted to. Let's look at the next one. What's the first number I put? 1020 minus 1,000 over 1,000 times 100. Okay. Some of you already saw what it's gonna be because you already deducted the stuff. So it's 20, right? Over 1,000. It gives me 0.2 times 100. It's 2%. Oh, let's look at this. Does it look like it's going in the same increments? So I have 1040 minus 1020 over 1020. Is that gonna give me the same range? Yes, and I'll just show you right here, 1040 minus 1020. I'm so pathetic with my voice, I'm sorry guys. saw those trends. And again, this is something AP will give you. This is very doable. Okay, so now we have another market basket, and this is where we'll end our notes today. So for me to figure out my market basket, what do I have to do? Multiply across. So for food, how much is that market basket? 30 for clothes and entertainment. So I total that up, that's 80, right? Check my math. Okay, you know it better than me. You have fresher eyes. So for 2010, 5 times 5, and 9 times 2, and then, 19 times 3.
57.
Okay, I'm trusting y'all. If I add that all up together, is that gonna be 100?
Yes.
Okay, good. So now, I need to calculate 2009's market basket. It'd be what? 0. So my next one would be this, right? 100 minus 80 over 80 times 100. You're like, okay, that's 20, right? But let's just do the math to show you. Divided by, and you're like, that's 1/4 is reading, right? Is that an easy number for you to recognize? When you got down, you're like 20 over 80, that's 1/4, right? That's 25%. This is definitely math that they would give you on the AP exam. There's one last thing we need to talk about is nominal interest rate. I talked about this word last time. What does nominal mean? What do we know that it has in it? This is inflation. So oftentimes, what will happen is banks, when they're giving you, or department stores, when they're giving you credit cards, they're gonna calculate for premeditated inflation. And I don't know how many of you have ever gone to a store and they've asked you to apply for a credit card. Most credit cards charge 25% because they're expecting, is it gonna take time for you to pay that back? And so over time, what happens with your money? It loses what? Value, and so they wanna be paid back in the same amount. And so that's why they're calculating this nominal interest rate inflation. If you ever just got bored and were reading through credit card stuff, this is that rate that they're charging you so they can be able to compensate for what they lent you. And real, what do you think it calculates out? We've seen this before. It calculates out what? So what I always tell y'all is when y'all get a credit card or you get something that is a bank account, a savings account, for you, what you should do is figure out the nominal interest rate. Let's do this. Let's just say the nominal interest rate is 5, but they're gonna give you. The rate of inflation is 2. How much is your actual value? 3. Okay, so should you take that investment? If it's giving you 3%, yes. What if the nominal interest rate was 3, inflation was 1, you're getting 2, right? You're like, that's not. But do y'all get what's going on?